Friends, as we did discuss in our previous class, the construction or the preparation of financial statement of the firms or businesses who provide services to their customers or their clients. Here in this session or in this video, we are going to understand the financial statement of the businesses who are involved in trade, or in other words, the financial statement of merchandising companies or firms. We also are assuming here the numerical example just after understanding or developing your basic understanding of financial statements. We are assuming the company is registered in a stock market. So before I explain you a numeric example, let me explain you or develop your basic understanding of what is financial statement. As we already have discussed the financial reporting system, so now just to understand the statements which are constructed in financial statements. Number one is the income statement. How you construct your income statement? Let's start to understand the basic understanding. If, for example, I ask you to calculate gross profit, so how you calculate the gross profit? For calculating gross profit, you need to calculate, very first step is the revenue or sales revenue. You have to calculate sales revenue. Then you have to calculate cost of goods sold. Once you calculate the revenue and the cost of goods sold, then you can easily calculate amount of gross profit. So the first step, you need to calculate the revenues. Revenues means the total sales of the businesses in a complete period. Then you need to calculate the cost price, that is cost of goods sold of the complete period. Once you calculate the gross profit, after it, if I ask you to calculate, for example, earning before interest and taxes. How you calculate earning before interest and taxes? You already have calculated the amount of gross profit. You need to subtract total other operating expenses from gross profit. So you can calculate earning before interest and taxes by subtracting total other operating expenses from gross profit. Now, for example, if I ask you to calculate earning before taxes, you already have calculated earning before interest and taxes. So earning before interest and taxes has already been calculated. If the amount of interest is subtracted from earning before interest and taxes, we get the result of earning before taxes. Now the last step, if I ask you earning after taxes, calculate earning after taxes. You already have calculated earning before taxes. So now what you have to do? You have to just subtract the amount of taxes from earning before taxes. So you can get the result of earning after taxes. So let's understand the same, how to calculate gross profit, and then earning before interest and taxes, then earning before taxes, and finally earning after taxes with a numeric examples. I am going to explain you 3 numeric examples of the companies or firms who are involved in trade or merchandising companies.